What is going on, guys? In this video, we are going to be talking about my favorite stock to talk about on this channel, and it gets a lot of heat from the internet, but that is Alibaba stock. There are a lot of people who oppose this stock, who absolutely hate on it, hate on China, hate on everything that's going on. I personally am just looking at it from an investment standpoint, and if it's a good investment, then, I love buying a stock, and Alibaba is a stock that I personally do own. So in this video, we're going to go over where the stock's at, what's going on with the stock, some of the background things that are going on, and then we're going to talk hypotheticals, which there's no guarantee in this world, there's no guarantee that any of this happens, but I like to look at the hypothetical, the risk versus the reward. So we are going to get into all of that in this video here today. If you enjoyed this video, make sure you drop a like down below, and if you want to see more videos like this one, make sure you hit that sub button. Real quick before we do that, the market tanked on Friday. We were down over 1% again, so we've been having a very strong month, over almost 7% over the last month, and it's been a crazy kind of move, but we had a little bit of pullback as things kind of level off, and we really don't have a CPI report or any big news for the next few weeks, so there's not a whole lot going on. There'll kind of be an interesting market cycle of do we just trade sideways for a little bit, do we go up maybe a little or down a little, what's going to happen over the next month, nobody really knows, but I just wanted to touch on that here real quick. Surprisingly enough, Alibaba was not down more than the market. So it on Friday only went down 1.22%. So not bad in total, but that also comes with the fact that over the last month, Alibaba is down over 13%, where the stock market, the S&P 500, was up over 6%. So in total, Alibaba has been getting damaged a lot more than the broader, US market, the S&P 500. And a lot of that comes from, a lot of the things going on with China. So they've had a lot of delisting concerns. They've had fines against big tech, more shutdowns internally within China, certain cities getting shut down due to the pandemic and things still going on over there in China, and China's regulations, basically trying to stop the spread of any diseases, anything going on. So it's been a very interesting 6 months. And even if we back up to the last year, you can see we're down 43%. And what's very, very interesting is if you back out to 5 years, they're actually down almost 50%, even on their 5-year time horizon. So, there's a lot of potential to be had. They could basically double up and get back to, where the stock price was in 2017, which is absolutely insane to think about. And they would double in price. So overall, a lot of potential upside in the stock price, and really the business. You can't tell me that Alibaba is in a worse situation than they were in 2017 in terms of the business. There's been an incredible amount of growth. I mean, even if you back out and look at Amazon stock over the last 5 years, they have only gone up basically. They have had a few dips here or there as the market's kind of corrected, but they're still up significantly, over the last 5 years. And Alibaba really is no difference in terms of their business. It's more a lot of the behind the scenes things with China that are going on. So here, there's kind of two interesting things. So I pulled this article. This article was published on Wednesday, August, I believe it's the 17th. And basically, China, there's a couple things that I've highlighted here. So the move to delist 5 Chinese state-owned enterprises from the New York Stock Exchange signals Beijing may be willing to compromise in order to strike an audit deal with the United States. So basically saying that, as the SEC and the US stock markets look at these Chinese companies and say, hey, you're not going to allow us to audit your books, so we are going to threaten to basically delist your companies, and that's going to overall hurt those stocks. The China is kind of responding, and specifically they're talking about Beijing, which a lot of these bigger cities, have a little bit more Western mentality thinking. So there's kind of this thought that's going on of, okay, what can we do to allow, the US to get some sort of auditing, come to some sort of compromise where the US can audit some of these foreign companies, these Chinese-based companies, right? The Chinese government does not want the US to come in and look at all these books because China has a huge stake in a lot of these companies. So they don't really want, the US digging around and looking underneath, under what's underneath the company's surface. So there's a lot of, back and forth here that's going on, and it's kind of just been going on for quite a while, the last year or so. And the other thing that's interesting here is, so there's the potential of a dual primary listing on the Hong Kong market. So this could access another 30 to 40 billion dollars of mainland buyers, so Chinese buyers of Alibaba stock before year end. So if this occurs, basically what they're saying is there's a lot of people that could flood into the stock and buy a lot of these shares and increase the price of Alibaba stock overall. And then I find this kind of question in this article very interesting. So it's, if someone asked you if you were interested in buying Amazon at a 66% discount with Amazon Web Services growth curve just starting, would you be interested? And basically what they're saying is Amazon growth services, China's digitization is 5 years behind the US. So basically they're saying that it would be like buying Amazon at a 60% discount, 66% discount, and buying it before Amazon Web Services had really taken off. So there's a lot of, potential there with Alibaba stock and what they're talking about. And again, this is the business behind all this drama. They're talking about the actual business fundamentals. So Alibaba, what is Alibaba as a business, doing, and what do they have going for them going forward? If you ignore all the, short-term things that are going on, all the short-term news, whether it's delisting, whether it's the pandemic, whether it's, China's, overall slow recovery of their economy, all those concerns, if you kind of ignore those and just ask the question of, would you be interested in buying Amazon or an Amazon-like company at a 66% discount before a major growth vector like Amazon Web Services has kind of come into play, which Alibaba, as you know, has a similar type of platform? I would kind of guess that most answers are going to be yes. It's just hard for a lot of people to, to get past a lot of these short-term things because they do have a lot of potential downside with them. If delisting does go through, then, the stock is going to fall massively as a lot of US investors get out. But that doesn't mean that it won't be relisted on, the Hong Kong Stock Exchange. And then potentially if the Chinese government, comes to some sort of agreement and wants, the access to the US stock market, then it's going to need to deal with and work with the SEC and other, regulatory agencies to allow for Chinese companies to be audited. And the final point that I had down here is, so on Monday, the People's Bank of China cut by 0.1 percentage points two key interest rates and pumped the equivalent of almost $60 billion into the financial system to rev up lending and wider economic growth. The unexpected move marked a small step forward toward support of China's economy that may foreshadow further cuts to borrowing costs in the months ahead. So this is huge again. So China basically saying that they're going to put money back into the economy. As you may have heard, Chinese growth GDP has been sinking incredibly, very, very low. A lot of people were projecting, double-digit growth for China for the, decades to come. And now they're seeing, single digits to even in some cases negative growth. So it's very interesting, that China is going to actually take the opposite stance of where the US is at right now. So the US is actually trying to cut back on lending, borrowing of money, anything like that, while China is kind of taking the opposite approach of, hey, we need to put a little bit more money into our Chinese economy and basically get things going again, which the fact that they're doing this, that the People's Bank of China is actually cutting rates and putting money back into the system is actually a very positive thing, for Alibaba stock, because what that kind of indicates as well is hopefully here in the soon future, they will also take a different stance on the pandemic. They will stop shutting down cities. They'll kind of accept, that this is part of, how life is going forward, implement more vaccines, things like that for their people, to take care of them overall. So it's kind of a good step forward overall for China, its economy, the growth ahead of China, and then all of that will come back, to help Alibaba stock. I wanted to finish off the video by looking at a couple things real quick. I know people don't like this comparison, and I don't think it's the perfect comparison, but we're going to look at a comparative, look between Alibaba and Amazon and what is going on, with their underlying fundamentals of the business. So here you have a forward PE ratio for Alibaba of 11.17. So very, very, very low. You can see back in, about a year ago, they were around 23. So over double where their forward PE ratio is right now. And then if you zoom even further back, they, have been even higher than that. So we're going to actually take a look here though at Amazon. So Amazon is very interesting. So they are sitting at an 83.33 forward PE ratio as of right now. And then again, if we go back, we can see the lowest was around 45. So what we can do is we can jump over here and actually look at what those PE ratios would mean, what different PE ratios would mean for Alibaba stock. So here we have the Alibaba current price of $89.63, the current PE ratio of 11.17, and then we are just putting in a fundamental forward PE ratio of around 25. I don't think that's unreasonable, especially for an Alibaba stock that has a lot of growth still ahead of it. So if we were to go up to a 25 PE ratio, forward PE ratio, we would see a price target, or the price go up to $200.60, which would be over 100% return. It would be almost 125% return on your money. So again, the comparison to Amazon, I don't know if it's completely justified, but if you went full out to the 83.33 PE ratio. So if Alibaba was in line with Amazon and it went from an 11.17 PE ratio to an 83.33 PE ratio, we would actually see the stock price go absolutely insane, and it would go all the way up to $668.65, which again would be absolutely crazy. That would be a crazy return on your money, over 600%, almost 650%. So if we want to be a little more, let's say, still maybe not super realistic, but a little more realistic, we can throw 45.45, which was that lowest Amazon PE ratio that we saw there on Yahoo. And what we would actually get is still an incredible return. We would see the stock skyrocket to $364.70, which would be a little over a 300% return. So again, I don't necessarily think that these price targets are necessarily reasonable, especially in the short term. I think there's a lot of worries that still need to be, dealt with. We need the delisting concerns to go away. We need kind of the pandemic in China to go away. We need China to look at their economy and, start putting money into, which they're already starting to do, which again is a positive sign. So we need kind of some of these things to go away. I guess I'd say the last one would be a lot of the fines on big tech in China. That kind of needs to disappear a little bit. We need to see the Chinese government to be more kind of working together with a lot of these tech companies instead of kind of working against them. So a lot of those things need to change. Like I said, personally, I think the downside risk, I do not see a whole lot more of downside risk. The only thing that could potentially happen is delisting, and that would obviously create a lot of downward pressure on the stock. We'd see, it move to a Hong Kong market with, different dollar values and projections. But overall, in my opinion, I don't see a lot of downside risk, and the potential upside is absolutely huge. I could easily see 100% returns going back to $200, but the stock has even been up to $300. So you could see a 200% return just to get up to, $300. So I don't think that's out of the question in my opinion. But overall, I'd love to hear your guys' opinion on the stock. Leave comments down below. And if you like the video, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. And as always, have a wonderful rest of your day.